Welcome students. In this video we are going to discuss about national income and the concepts of national income. Okay, let me begin with the meaning of national income. So it means the sum total of factor income earned by the normal residents of a country in an economy in an accounting year. Okay, so it means the sum total of factor income. So here the factor income, okay, so the factor income refers to the factor income refers to the income earned by a person for rendering his factor services. So factor services in the sense it may be in the form of wages, rent, interest and profit. Okay, so factor income means it may be in the form of wages, rent, interest and profit. Okay, so then earned by the normal residents. Okay, so here the word normal residents means the person resides inside the country, okay, inside the nation. So the person who resides inside the nation. Okay, so in an economic, in an accounting year, so as we all know the accounting year. Okay, so that is 1st April to 31st March. So the accounting year is begin with 1st April to 31st March. Okay, so national income means the sum total of factor income earned by the normal residents of a country in an economy in an accounting year. Okay, so the concept of national income was introduced by Nobel laureate Simon Kuznets. Okay, Nobel laureate Simon Kuznets. Okay students, so before enter into the concept of national income, we need to know the difference between intermediate goods and final goods. Okay, so in national income, we calculate the final monetary value of final good, isn't it? So here we need to know the meaning of final good. Okay, so good in the sense any object, okay, which are useful for our day-to-day life. So goods means any object. Okay, goods refers to any object which are useful for our day-to-day life. So here we have two type of goods, that is intermediate goods and final goods. Okay, so okay, let me give an example. Suppose we produce steel. Okay, suppose we produce steel. Then from the steel we can produce what? Car. Okay. Or if you produce yarn means by using yarn we can produce shirts. Okay. So listen carefully students. If you produce steel means by using steel we can produce car. If we produce yarn means by using yarn we can produce shirts. Okay. So here what are the similarities and the differences in these products? Can you guess the answer? Okay, let me explain. If you look at the steel, steel is the good. So it's a product but it's not yet ready for final consumption. Okay. So here if you look at the steel, steel is the good. Okay. It's a product but it's not yet ready for final consumption. Okay. So here steel is an intermediate good. So here steel is an intermediate good because this would be in the process to produce a car. Okay, so here this would be consumed. So steel is consumed in the process of producing a car. Okay, so suppose we talk about yarn. If we talk about yarn, Yarn is not a final commodity. Okay, it is a commodity which should be used in the production of what? Shirts. Okay, so if we talk about steel, it is not consumed by the final user or consumer. So steel is not a final commodity. Okay, so coming to shirts, it's something which is ready for the consumption. Okay, it is a product which is ready for consumption. Okay, it's something which is ready for the consumption. So these are all final goods. Okay, so that's why this is the final commodity. So we have to understand two things here. So steel and yarn are intermediate goods. Okay, and car and shirts are final goods. Okay. So when we talk about the production in the country, which of the goods should we take, intermediate or final goods, students? Can you give the answer? While we talk about the production in the country, okay, which of the goods should we take, intermediate or final goods? Suppose I take the value of steel, okay, suppose I take the value of steel produced in the country, then again I take the value of car produced in the country, okay. So it may lead to double counting of the same commodity. Okay, it may lead to double counting of the same commodity. That's why we have to understand that whenever we talk about the production of the country, we have to achieve the right figure. Okay, we should talk about only the final goods. Okay, so we have to calculate the final goods, not the intermediate goods. Okay. Okay students, let me discuss what are the concepts included in the national income. Okay, so the first one is GDP, the next one is GNP, the third one is NNP, then NNP at factor cost, and then the personal income. Okay, so here let me begin with GDP. Okay, the expansion for GDP is gross domestic product. So here the meaning for GDP is it is the total market value of all final goods and services produced within a country during a year. Okay, so it is the total market value of all final goods. So total market value of all final goods and services produced within a country. So within a country during a year. Okay, let's see the meaning word by word. Okay, so here total market value, the word total market value, in the sense, let me give an example. Okay, suppose we talk about production in India. Okay, we talk about production in India. In India we had production of milk in liters. Okay, production of steel in tons. Okay, so production of eggs we say in numbers. Okay, so how do we add them up? Okay, these are all in different units, am I right? So we don't have any measures in the quantity in different units. Okay, here what we do is we convert a production into the monetary value. That means market value. We should convert these different units into market value by multiplying with the prices which are prevailing. Okay, so suppose we want to add the production of milk to production of eggs, means what we do, we convert milk into liters from milk into rupees, and we convert steel into tons from steel into rupees. So we write here the market value of all final goods means, which means the goods. Here the final goods represents the goods which is ready to consumed, and now they are going into the further process of production. Okay, so to avoid the double counting, here they are using final goods for the calculation. Okay, so here the word within a country, which means the area. Okay, so the territory. Okay, so it represents the territory or area of the given nation. So during a year, that means the financial year, that's from what? 1st April to 31st March. Okay. So here GDP is calculated by using this formula C plus I plus G plus X minus M. So here the C represents consumption. Okay, consumption. I represents investment. Okay, I represent investment. G represent government. That is goods produced by the government. X minus M means exports. It means exports. Okay, for calculating GDP, here what should we do? We have to add consumption plus investment plus government purchasing plus exports. Okay. X minus M, in the sense exports minus imports. Okay. Here we need to deduct imports from exports. Okay. Okay students, next we look into the concept of GNP. Okay, that is gross national product. So what's the meaning of GNP? It is the total measure of the flow of final goods and services at market value resulting from current production in a country during a year, including income from abroad. Okay, it is simply we have to add income from abroad. For example, if a person doing business, okay, if a person, that means Indian citizen doing business in abroad and he is earning income from abroad, means that is added here. That is the income earned from abroad. Okay, that income is included here. Okay, in GDP we are calculating the production that is happen inside the country. So we are not including the income that we are earning from abroad in GDP. Okay, so in GNP what we are doing here is we have to including the income that we are earning from abroad. So that is the GNP, gross national product. Okay, so as usual the formula is for GDP what we are doing, consumption goods plus investment goods plus government purchases plus exports minus imports, and here plus we are adding the net factor income from abroad, that is GNP. Okay. Okay, the next concept is net domestic product. Okay, the expansion for NDP is net domestic product. Okay, net domestic product. Let me see the meaning. Okay, so it is the value of net output of the economy during the year. Okay, it is the value of net output of the economy during the year. So NDP equal to GDP minus depreciation. NDP equal to GDP minus depreciation. Okay, let me give an example so that you can easily understand this. Okay, so if you purchased a machinery in the year 2020, okay, so then after 5 years the machinery won't have the same value as we purchased in the year 2020, isn't it? This is because that the machinery undergoes certain wear and tear, and this we call it as depreciation. Okay, so depreciation is that wear and tear happen to capital goods. So while calculating the national income, we said all final goods and services are taken into account, that means taken into consideration. Okay, so but these final goods also include some capital goods also. Okay, so these capital goods have some wear and tear. Okay, so that means depreciation. So here we have to deduct the depreciation. So for calculating NDP, we have to deduct, we have to depreciate, okay, from GDP. Okay, here we need to deduct depreciation from GDP. We need to deduct depreciation from GDP for calculating net domestic product. Okay. The next concept is NNP. So the expansion for NNP is net national product. Net national product. Okay. So what is the meaning for NNP? If we see the meaning, it refers to the value of the net output of the economy during the year. Okay, it refers to the value of the net output of the economy during the year. So NNP is calculating by GNP minus depreciation allowance. Okay, so here in GNP, what we included? Can you guess? In GNP, we include the net income from abroad. Am I right? So here, what should we do is, for calculating NNP, we have to deduct depreciation from GNP. Okay, we have to deduct depreciation allowance. In the sense, depreciation is also called capital consumption allowance plus indirect taxes. Okay, depreciation is also called depreciation allowance plus indirect taxes. Okay, so here what should we do is, we have to deduct depreciation from gross national product. Okay, we have to deduct depreciation from gross national product for calculating NNP. Okay. The next concept of national income is NNP at factor cost. Okay, NNP at factor cost. So the NNP refers to the market value of output. NNP refers to the market value of output. NNP at factor cost refers to the total of income payment made to the factors of production. Okay, total of income payments made to the factors of production. So factor cost means cost in factor cost. Here you can see the word factor cost, isn't it? So it means cost incurred on factors of production. Okay, factors of production, can you list out the factors of production, students? There are 4 factors of production, isn't it? Land, labor, capital and entrepreneur, right? Isn't it? These are all factors of production, isn't it? So here factor cost refers to the cost incurred on factors of production. That means land has to be given as rent. Okay, labor has to be given wages. Okay, capital needs to be paid interest, right? And entrepreneur provided with profit. Okay, listen carefully. Land has to be given rent. Okay, labor has to be given wages, capital needs to be paid interest, and entrepreneur receives provided with profit, isn't it? So here the factors here the cost that is incurred on factors of production is meant as factor cost. Okay, so how we are calculating NNP at factor cost? NNP at factor cost equal to NNP at market prices minus indirect taxes plus subsidies. Okay, so NNP at factor cost is calculated by using NNP at market prices minus indirect taxes plus subsidies. Okay. Okay, students, we will discuss the rest of the concepts of national income in the next video. Thank you, students. Have a great day.